When confidence finally evaporates, there'll be a massive stampede into real money. And once gold breaks $1,900, it's off to the races thereafter.
Please join us for our next live stream Sunday, May 24th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, May 24th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Once again, if you are new to this channel or you have not already done so, please do subscribe. Click on the bell to be notified on new updates and give us a thumbs up. If you like what we do, we truly do appreciate your support. David Stockman is our guest today, the former director of the Office of Management and Budget under President Ronald Reagan, and he was the youngest cabinet member of the 20th century. His 20-year career in the financial industry has seen him in executive positions with the Blackstone Group and Salomon Brothers Incorporated. David is also the author of several books, including his latest book, Peak Trump, The Undrainable Swamp and the Fantasy of MAGA. It's our honor to have him here today again as our guest. It's time to saddle up and silver up for David Stockman. David, welcome back to SBTV. How are you doing?
Great, and happy to be with you. A lot to talk about right now.
Oh,
in fact,
sure is.
We're in unprecedented times. I've been at this game a while. I started in Washington in 1970. I've never seen anything like this. We have in the country a hysteria that rivals, anything we've ever seen before. And governments and the central banks and the governors and mayors are all out of control. This is an assault on the economy that we've never seen anything like this before. One statistic I use just to get this thing rolling is, as everyone knows, we've had now these huge initial claims for unemployment each week for the last 6 weeks since they started the lockdown in mid-March. It now totals 30 million new claims in 6 weeks. And the reason that 30 million is scary, it is in its own right, is that number is the total number of job losses in all the recessions that the United States has experienced since 1945. If you can imagine that. In 6 weeks, we have wiped out more jobs as a result of these uncalled for, excessive, sweeping, one-size-fits-all shutdowns or lockdowns, as they're calling them, than we experienced in all the business cycles, more than 10 of them since 1945. So we're deep in the soup, and it's not going to be bouncing back from bottoms that we've never seen before very easily, because the American economy was weak. Its immune system was more or less destroyed anyway before all of this started as a result of the debt that we've created and the massive amount of speculation and malinvestment that has stemmed from central bank policy. So that's where we start, in a pretty nasty pickle, if you want to summarize things.
Yeah, one thing that's pretty curious is with this blanket policy of lockdowns and whatnot, you would have to have a little bit of common sense in this thing and understand that a state like New York would have a different set of circumstances from a state like Wyoming or Iowa. So why do you think it was just a blanket policy?
Well, I think there was a panic in the White House. Trump did the right thing during February, tried not to inflame public opinion and scare the country and resist the idea that this was some kind of black plague equivalent, which is not. But finally, around mid-March, because he really doesn't pay attention, doesn't do his homework, changes his mind constantly. I think he's a weak blowhard. I can say a lot of bad things about Trump, but he threw in the towel and allowed his medical doctors to take over. And they've engaged in flat-out malpractice. Dr. Fauci has been on the government payroll his whole life since he graduated from medical school in 1966. He went to the NIH, Infectious Disease Institute. He's been in that same dark tunnel, for the last 52 years. Dr. Birx, I call her the scarf lady. She's got a new one on every day as she preens around and prances around on the evening reality show that Trump is running, has also been on the government payroll her own life. I've added it up. 94 years on the government payroll. What do these people know about what it takes to run a $22 trillion economy? How it really works out there when you've got to meet a payroll, how it works when you've got to take risks, how it works when you've got to keep a balance sheet managed, how it works when you've got to have income coming in to pay your bills if you're a family, or cash flow coming in if you're a small business. They had no clue. And so they took the simple-minded, I call it a social science experiment, and it kind of gets me hot under the collar, to tell you the truth, because it's never been tried before. Mankind has been struggling with plagues and viruses and infections, since time immemorial, and our immune system always wins and the viruses lose. That's why, there's 7 billion people on Earth today, and it's not a planet, run by the viruses and the infections. Okay, so rather than allow natural herd immunity to develop and focus on the people who are really the victims of this unusually nasty and stubborn virus, which is older people, especially people over 80 who have one or more life-threatening medical conditions already, hypertension, diabetes, respiratory illnesses, heart disease, and so forth. Instead of trying to target on the 5% at risk, and that's how I calculate the number, they basically decreed that one size fits all. We're going to stop the spread of a virus that can't be stopped. And in the process, what they did stop, what they flattened, was not the curve of infection. It's pretty obvious that, a large share of the population has been affected and most people are asymptomatic. But what they flattened was the U.S. economy. This is crazy. And it's been going on now for 6 or 7 weeks, and it's not going to be that easy to extricate ourselves from, because so much damage is being done day in and day out. I mean, when you see things like bookings at Airbnb, for instance, down 80%. When you look at the number of people going through airports each day, which the government happens to report, down 95%. When you look at 30 million layoffs, and we can go on and just name statistic after statistic, April car sales were 8.5 million units. We haven't seen that number since 1969. But in 1969, there's 100 million drivers. Today, there's 250 million. So, the economy is being monkey hammered, best word I can think of at the moment, in a way that we've never seen before because of these one size fits all across the board shutdowns. But when you look at the actual data, 80% of the deaths, and they're totally focused on deaths, CNN runs it across the screen day in and day out, constantly updating it. And all deaths, of course, are unfortunate, but they do happen. But 80% have occurred among people over 65, the overwhelming share of whom have had one or more so-called comorbidities. Now, if you look at the CDC's own numbers, and I think this is just an amazing thing, we have shut down all the schools in America, more or less. And we've basically put under house arrest in some wacky, crazy way 62 million young people under age 62, or under age 15, 62 million, I'm sorry, under age 15. And do you know how many COVID deaths even the CDC reports with its elastic definitions? Five out of 62 million people. I mean, this is crazy. The kids should be in school, and as some more sane and rational epidemiologists say, their job is to spread the virus and to, spread the herd immunity that eventually develops. On the other hand, if we look at the population 80 and over, for instance, there have been something like in New York State, for instance, which is the epicenter of this, there's been something like 2,000 deaths per 100,000 people. So when you have 2,000 among the elderly and 5 in the whole country, that's not 5 per 100,000, that's 5 overall, you know that the policy being pursued is, pardon my French, ass backwards. It should be targeting and quarantining and helping and treating that very small fraction, especially those in retirement homes and skilled nursing homes who are vulnerable to the virus, and allowing the kids to go to school and the parents and the workers to go back to work and go back to the malls and do whatever else they do. So, we're in a real pickle here, and it happened so fast that I don't think, it's happening with what I call warp speed. This isn't like the normal recession or even quasi-depression that takes months and months to develop. This happened overnight, and we have basically people like deer in the headlight in Washington. They're spending money at the federal level like there's no tomorrow. I mean, it's crazy where the fiscal situation is going. And then we have these fools at the Fed who have printed more money in the last 6 or 7 weeks than anyone previously could imagine. $2.6 trillion of freshly minted, money since March 16th. So, these are some of the things we're coping with here. And what it means is there is a real pandemic in this country, but it's a pandemic of hysteria about a virus that is not nice and is dangerous for certain people, but it's really no different than many other viruses that we have coped with in the past, and we didn't shut down the economy. I can remember when I was a student, I think I was maybe 23 or 24 years old, when the Hong Kong flu hit in 1968. Well, they didn't shut down anything. They didn't shut down classes. We weren't wearing masks. We weren't social distancing. We weren't locked into our dorm rooms. And, even then, in today's scale of economy, 175,000 people died from the Hong Kong flu. But again, it was elderly people who were vulnerable, got in harm's way, unfortunately. And, the flu triggered some other, dysfunctions they had. And that's where we are again today. And, we can cite other examples as well.
Yeah. The Great Recession, we've never been able to remove that punch bowl from Wall Street. And now we're having a lot of these helicopter money, so to speak.
Right.
Are we going to be able to remove that punch bowl, that helicopter money away from the average Joe?
Well, I don't know. I mean, I think we've now gone way over the top. Last time they bailed out Wall Street and the car companies and selected workers who happened to have a big fat UAW job. This time they're bailing out everybody and their brother and anybody in between. I mean, look at the $1,200 grant per person. I think there's 160 million checks going out. Well, it's one thing to say certain people are now short income because they've been laid off. There's 30 million of those. But if you're going to put out money, you should at least have a means test. We shouldn't be giving out money hand over fist to a lot of people that don't need it. So this is getting the country used to the idea that if you can create enough panic, if you can create enough sort of hysteria. Well, this isn't our fault. It, came from somewhere. Someone else caused the problem. So, we're not obligated to put away any funds for a rainy day. We're not encouraged to save money so that if, untoward circumstances or dislocations develop, we can tide over. No, the whole thing is now, spend every dime you earn and borrow some more on top. And if a bump in the road comes, well, your rich Uncle Sam is going to bail you out. And so you're bailing out 160 million people. That's just insane. $300 billion right down the drain. Then they're saying the same thing to the 15 million or 20 million small businesses in America. Line up at the soup line and get your 2 months worth of payroll and utilities and mortgage payments, whatever you have. I mean, how in the world can an economy work when your rich Uncle Sam, who's really broke, is borrowing money hand over fist? They borrowed 1.2 trillion in April alone. Yeah, the U.S. Treasury borrowed 1.2 trillion, and then that's not being funded by private savings or by investors. It's being funded by the Fed. The Treasury issues the bonds, Wall Street buys them, and the next hour they sell them back to the Fed because that's exactly the kind of circular nonsense that's going on at the moment. So we're really off the deep end in the kind of dystopia of false, unsustainable finance and economics that many of us have been warning about for years, but we never ever thought it could get this crazy, or that you would have people as weak and insipid as Powell and all the rest of the Fed heads there today. How in the world do they think that by just massively buying every bond in sight, municipal bonds, corporate bonds, high yield ETFs, everything that the government is issuing, mortgage-backed securities, commercial paper, how in the world do they think that is going to help the economy? It's simply driving interest rates on everything to zero, which is another way of saying you're abolishing the price of financial assets. And you're basically forcing the system to run blind. The whole point of an interest rate, the whole point of a stock price is that it's supposedly the product of price discovery, of an assessment of the future, an assessment of risk, an assessment of security or risk to the cash flow or return of principal, or if it's a stock to the earnings growth rate and risk of loss in the security. Well, when everything is zero and the Fed's buying everything hand over fist, you've basically abolished the heart of capitalism, because that's capital markets. That's where it all starts. That's where savings get accumulated. That's where investment gets allocated and made. That's where the right price for capital and money gets discovered. And all of that has now been more or less destroyed by the central banks led by the Federal Reserve. So it's going to be hard. It would be hard enough, I would say, to get out from this lockdown calamity, even if the U.S. economy were healthy, if we didn't have 75 trillion of debt, public and private, weighing down like a millstone on the economy, and if we had a central bank that was even halfway rational. We have none of the above. We have politicians that are out of control. We have central bankers who are madmen, effectively. And we have an economy that's, been basically undermined and eroded for the last 30 years as a result of all of these bad policies. Now it's all coming together in one sort of perfect storm of economic and financial catastrophe, in my view.
Yeah, have a question with all of these things going on, with what the Fed is doing. They're shooting their bazooka, they're throwing everything and the kitchen sink out there. Is it all an effort to not have to go to negative interest rates?
Well, yeah, I guess you could say that that's true. But when you get the nominal rate down to zero, which effectively the money market is right now, and if you want to call what is the 5-year bond today or note, it might be 25 basis points. Between us, that's close enough to zero for government purposes, right? So when you get all of the nominal interest rates close to zero, and in a world where there's still inflation, it hasn't gone away. In fact, there's going to be some commodities like food commodities and other supply chains that are breaking down, groceries that are going to be soaring. So when you have a world with some inflation, and it's been running 2.2% on the decent measures of inflation that we have, and the nominal rates are zero, that means that the real return on money is negative. It's already there. And what they're now trying to do is pretend that that what they're doing is not pushing the nominal rate to a negative sign, but for all practical purposes, we're there. But the real sin is the massive balance sheet expansion. Because how in the world are they buying? And they've purchased 2.6 trillion worth of paper since early March. How did they buy all that paper? Well, with digital magic. They basically seized it out of thin air and bought up real bonds and real commercial paper and real asset-backed securities with the printing press, and therefore all the prices out there are falsified. All the prices out there have been totally distorted by this massive intervention, and it's got to lead to trouble. For one thing, it keeps all the zombies alive. There should be a lot of bankruptcies going on right now. There are some. But there ought to be a lot more. But when the Fed drives interest rates close to zero, then you get disaster cases like Boeing that can go out and sell 25 billion worth of debt at practically no yield, given the enormous risk that's now built into Boeing, because the marketplace knows that the Fed is soon going to be buying corporate debt. So they're front running. I mean, the amount of speculation out there is criminal practically. And what the Fed is doing is criminal because, it's really financial fraud. To buy 2.6 trillion worth of real, of securities that represent real economic resources with credits, pulled out of thin air. That's financial fraud of a massive scale.
Yeah, you touched on the Fed's balance sheet. Is there a limit on how high that balance sheet can go, or is there finally going to come a point where people will just absolutely lose confidence in the currency and the money and the monetary system?
Yeah, I think you hit the nail right on the head. No one knows where that point is. I'm shocked that we've gotten as far as we have. It's about 6.8 trillion right now. But now there's casual conversation given the policies they have in place and the rate of daily purchases, which has been tamped down. But still, they're allegedly heading for 8 to 10 trillion. And of course, that's just the Fed in the U.S. The ECB is back at it again. The Bank of Japan never stopped. I always point out that at the turn of the century, around 1999, 2000, the combined central banks of the world had 2 trillion of balance sheet. It's now about 28 trillion. And boy, it's rising by a couple trillion a month if you look at it on a worldwide basis. So how far this can go, I don't know. But if it doesn't stop soon, then everything anybody ever learned about the fundamentals of finance over the last several centuries was wrong. and that what we all should do is stop working, stop investing, stop worrying, and just stand around outside every Thursday afternoon and let the central banks drop helicopter money from the sky. That can't work. That is going to destroy the financial system at that point, and no one knows when that inflection point will come. But it's like the old saying about bankruptcy. It happens slowly at first and then all of a sudden, okay? And I think the same thing is happening here. Slowly at first, confidence is being lost. Because remember, last time they told us this was an emergency, all this QE was kind of an emergency, one time, once in 500-year flood, blah, 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 all the stuff, lies that Bernanke had to say. Well, now they're doing it again with malice aforethought. And sooner or later, confidence is going to eventually be, totally consumed. And then look out below, because once you reach that break point, once you reach that inflection point, and people start selling indiscriminately, central bank-based securities, look out below. And then, of course, the opportunity for real money, silver and gold, will have its day. So I think that's where it takes us at the end of the day.
Okay. If you had a say, and you had an opportunity, let's say, to talk to Jerome Powell, or even if you were the head of the Fed, what would you be doing? Or head of the Treasury, what would be your solution as to what's going on?
Well, it's so far gone now, I would resign. Okay. I don't mean to be light or flippant about it, but these people have gone so far off the deep end. I do not know how you turn it around. When the government is going to be spending something like $7 trillion this year, the run rate of spending was about $4.8 trillion. They've taken it up over $7 trillion already. Lockdown nation has really decimated the revenues. I pointed out the other day in one of my posts that in April, revenues of the federal government were down 42%. There's nothing like this that's ever anywhere in any book you can find in any month, even during the Great Depression. So revenue is going to be under $3 trillion. You're going to borrow $4 trillion this year, and even the CBO is predicting another $2-3 trillion in the year after. So $8 trillion in 3 years. Now, if you're the Secretary of the Treasury and you got to finance an $8 trillion flow of red ink, what are you going to do? I mean, what you're going to do is beg the Fed to print money and buy up the paper that you can't sell to anyone else. So we really have a vicious circle here. Plus, you're asking me what I would do. What the people in charge are going to do is, simply whistle past the graveyard. This idiot that we have in the Treasury Post today, Mnuchin, he has no clue about what the fundamentals of, finance are, what sound money is, what fiscal rectitude is. This guy is a clueless idiot. And that's who we've got. And Jerome Powell, I thought at one point maybe he was quasi-sane, but, listen to him talk. And someone hit him the other day. For instance, this is a crime against savers. To be driving the interest rate to zero is a crime against savers. It's saying that a agency of government with the coercive powers of the Fed and the monopoly right to print currency and money that the Fed has, that they're basically going to weigh in on the equation totally for the debtor, totally for the borrower, totally for the speculator, at the expense of the saver, the fixed income retiree, the prudent person who attempts to, keep some kind of rainy day funds and savings for later in life or for emergencies. It's basically savaging these people. And they ask, they asked Powell, how do you justify that? They didn't say it quite as colorfully as I have. How do you justify savaging one half of the economic world, the saving side, as opposed to the borrowing side? And he just kind of muttered total incoherence. They, that this is good for the economy, so therefore it's good for the saver. That a lifetime worth of savings, if you're a retired worker, won't even buy you one cappuccino per week at Starbucks as soon as they let it open. I mean, that's where we are today.
Okay, back in 2008, we saw gold and silver really move after that crisis. Right now, we're not really seeing it move the way it did back then. In your opinion, why isn't it moving that way? And do you think it will once again move the way it did back then?
Sure. It's almost impossible to predict these markets in the short run because they're massive speculation in anything that you can trade, including gold and silver. So therefore, if you're looking at a 1 day or 1 week or 1 month horizon, I have no clue about where we're going. But I do think that we're near the end of the line of this whole, what I call phony Keynesian central banking regime, and that when confidence finally evaporates, there'll be a massive stampede into real money. And once gold, for instance, breaks $1,900, it's off to the races thereafter. And I think that will happen in the next year, 2 or 3, because there's no way out of this trap that has been created through what I earlier called the perfect storm of massive financial error, which we've been pursuing for years and decades now, hitting lockdown nation that resulted from the panic in the White House when this seasonal virus came along and, under the unfortunate circumstances of mid-March, somehow induced the Donald to put Dr. Fauci and the scarf lady, as I call her, front and center every day to scare the hell out of the American people and basically trigger the whole lockdown. And these people are so damn stupid. They didn't realize that once they put out these guidelines, so the stay-at-home guidelines, so-called, that was just a flashing green light to the Democratic governors and mayors of America to attack the economy, to shut it down, because they were looking for a way to get even with Trump anyway. They tried Russiagate, that failed. Ukraine Gate, that hoax failed. They tried impeachment, that didn't get off the ground. And then Trump comes along and hands them, the Corona Gate on a silver platter. I mean, it's his stupidity in the original instance, because frankly, if the White House hadn't given the green light, hadn't legitimized this kind of across the board shutdown panic, yeah, I don't think all these mayors and governors would have been nearly as aggressive about telling people you're under house arrest and telling businesses that, we're going to destroy your property built up over a lifetime because we want you to be an instrument of stopping the spread of a virus that's going to spread anyway. I don't think a lot of that would have happened if Trump would have just remained himself and not brought in this, pretentious old windbag by the name of Fauci, who should have retired years ago. And fought the thing. These governors who are now running their own daily reality show, like Cuomo in New York and all the rest of them, wouldn't have been nearly as aggressive as they have been.
Okay, so let's say if these lockdowns end, can the economy come back? Can the economy come back to even close to where it was?
Well, I don't think anytime soon we're going to get back to where it was in January 2020, because we had a recession scheduled anyway. We were in month 129 of the expansion that started in late June 2009. That was a record 10 months longer than the longest previous one and more than double the average business cycle expansion. So we had debt building up, we had malinvestment building up, we had weaknesses and excesses everywhere in the economy, so the recession was going to come. But what Lockdown Nation did was trigger it all at once and violently and vehemently in a very short period of time. So now there's going to be a tremendous amount of broken furniture. There's going to be bankruptcies and defaults. Will make 208, 209 look like a Sunday school picnic, notwithstanding all the bailouts we're doing, because, you may have noticed that the second tranche of that so-called PPP money, payroll protection, they've used all that up already. And now you had Kudlow the other day and some others saying we need a third tranche. They're not going to be able to put enough money out there, as crazy as it is, to bail out the 15, 20 million businesses in America that are, being really savaged by this shutdown. So I think this is going to be a long, deep L-shaped bottom. We're not going to spring, back to life anytime soon. And the market, of course, is pricing a V-shaped recovery, the stock market, and I think that's totally delusional. We just went through a month in which 30 million people suddenly found themselves with no paycheck, the month of April, and the stock market had the best month in the last 52 years. Now, what kind of sense does that make? Well, obviously, the robo machines and the day traders didn't care a whit about what's happening in the real economy. They don't discount the future anymore. They're not in the price discovery business or the earnings discovery business. They're simply, speculating that the Fed will keep, come hell or high water, keep the market averages rising. And I think that is a huge, huge mistake, because I don't think even the Fed, with all the money that it can print under these circumstances, when earnings really start to crater, I mean, earnings are going to be under $100 a share soon, and there's no way you can keep the market up at 2,800 or 28 times earnings on the S&P. That's just craziness. Yeah, and I'll just say this is a very critical time, and I think it takes, perspective, knowledge of history, a grasp of the fundamentals of sound money and finance, an understanding of why over the years gold and silver have been the only real money that has sustained itself over time. And this is what I've spent a lifetime doing, and this is what I write about every day on David Stockman's Contra Corner. So there's a lot of information to grasp, to deal with, but if you don't put it in the right framework, what good is it? And what I try to do in Contra Corner is put all this in a framework that's based on sound economics.
Okay, I can hear the viewers screaming in my ear right now, telling me, ask David if he thinks a new monetary system will be coming and if he thinks gold will play a role in it.
Well, I can only say I hope a new one's coming. And if a new one's coming, there is no choice except to re-anchor to a gold base that central bankers can't print at will. That was the great mistake of 1971. By the way, I started working on Capitol Hill in 1970. I was there when Nixon went to Camp David and made the mistake of the century when he basically closed the gold window, shut down Bretton Woods, and released the Fed print at will. It took them decades to figure out how far they could go. And now here we are, where they're a couple days, a few weks ago, they were printing money at an 80 billion daily rate. Let me repeat that, daily. I mean, this is, I remember when all this happened in the great debate in August 1971, no one could have imagined central banks being this far off the deep end. Even the craziest populist money printer around, like Wright Patman, who was chairman of the banking committee from Texas all those years, no one could have imagined what we've ended up with. So it's important to get a grasp and a perspective on this in order to figure out where things are going next.
Yeah, that's a great story. David Stockman, I know you're a busy guy, but before we wrap up, can you share with us more about your work and how we can find your writings?
Yeah, well, I do talk about all these issues that we've covered here every day in my publication called David Stockman's Contra Corner. And I think you're going to post the information on your site, or you can Google it and, sign up for a subscription.
Okay, and you're also on Twitter, right? So guys can follow you
Yeah,
there.
yeah, you can follow me on Twitter as well. Exactly.
Okay, yeah, because we saw a few of your tweets and we said, hey, we got to get in touch with David. We've got to
Okay.
get him back on. So we do appreciate your time, and we hope we can do this again.
We certainly will. Great. Thank you.
That was David Stockman, the former budget director of the Reagan administration. For more of his insights on the global economy, please visit his website, davidstockmanscontracorner.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content, and do also check out the SBTV podcast on iTunes and Spotify.